Hi everybody, welcome to another update on the Stock Screener. Someone wanted me to look at Lithium Americas. Well, Lithium is starting to rise, so it's time to take a look at some companies. I have never looked at Lithium Americas, so it's time to do so. Looks like it's a bottom, maybe it will go up. I have my template, let's go over the presentation. What is this company? So shares outstanding 162 million. Okay, so 162 million. So it's 500 million market cap. Yep. 100 million cash. And let's look at the balance sheet. Yes, 100 million cash. 112. Then we have some assets. Investment in Lapuna. Loans. More loans. More investments. I mean, how much should I give to this? What's this worth? I mean, loans will get repaid, right? So this should be added. Investment, yeah. I guess it's worth something. So let's say this is 400 million, 500 million, 600 million. 600 million, okay. So minus 600 million. I'm not going to add any value to this exploration. Then liabilities, 228. But this is weird. Enterprise value of 2. Enterprise value of 2. Equity 900 million. And market cap 500 million. So it's trading at half book value. Why is it so cheap? Maybe because it's not in production yet. That's what I guess. So 40,000 tons per annum battery quality lithium carbonate. Then plus 20,000. Oh, this is already operating. If this is operating, then why are there no revenues? That's weird. So 40,000 tons per annum. So actually ounces is tons per annum. Stage 2 plus 20,000, I don't know when. Let's say like this. And then more details. So Olaros stage 1, stage 2. Okay, so October they have commercial production. So that means revenue should come in. They produced 25,000 lithium for the full year 24. surpassed guidance. Fourth quarter, 85% of design, 8,500 tons produced. How do they get to 25,000 then? They only produced 8,500 in the fourth quarter. I don't understand this. Maybe they produced some at the beginning of the year. But basically, they should get to 40,000. So I'm going to use 40,000. Cash, 90 million in cash. Short-term debt. Do they even have debt? What kind of debt do they have? 18 million, that's a lot of convertible notes. Yeah, that's a pretty high amount of convertible notes. And finance costs, there's some finance costs on that. 24 million. Okay, so 24 million interest. Interest payments. Let's say it goes down as they repay it. Not sure yet how much. Finance and other income. Oh, that's good. There's some other income. Let's see what that is. Interest on loans. Okay, so they do get some interest payments coming in. That's good. So plus 13 million. Let's say 50 million. So that's this minus 50 million, which is actually like this. Now they are also going to repay it. So let's say like this. Okay, sounds reasonable. What else? Exploration, G&A. Okay. So 25,000 estimate is 35,000. They think 35,000, which is below capacity. I don't know when they are going to build the 60,000, but let's say somewhere here. Okay. So they did produce a lot of lithium already. So that's where that came from. We don't know what's happening in 2026. That's weird. Sales revenue from exact is not added here. Uh, this is weird. Loans to exact. Investment in Saldana Una project. What's that? I don't understand where this is coming from. Realized price 8,000. Okay, 8,000. And the price was around 10,000, so they get a bit less. Yeah, let's use 8,000 for now. So this is going to be 8,000 per ton. And it went down to 7,000. So this is 8,000 and now it's 7,000, but it could go back to 8,000. Let's take 7,500. Okay, so basically they get, this is 10,000, but they get 7,500, so it's about 20% lower than spot. I don't know what this is. Price deduction. Oh, so they have price deductions. So less price deductions. Okay. Anyway, it's somewhere around 7,500. Operating cost 6,543. That's operating cost. Um, 543. So it's low margin. You can see that it's low margin. And I don't think they added the SG&A in it yet. So there's this cost of sales and then selling and administrative. Still needs to be added. So how much is this? 6 million per quarter, 24 million. Yeah, 6 million per quarter, 24 million. And let's use 24 million capex plus SG&A. That's the SG&A. This is not included in AISC. Tax rate. I don't know what the tax is in Argentina. What's the tax? Approximately 30. Maybe it's higher, I don't know. Let's say 30. Okay. I still don't understand why there are no revenues here. Exact. I should probably read all of this, but I'm not going to. You can see here what the costs are and what the sales are. Pretty high cost. Okay. Uh, ownership. What's the ownership? They have Pastos Grandes, 65% ownership in Sal de la Puna Arena. Uh, 44% ownership interest in. So they own 44.8% in this thing, and Ganfeng owns the rest. Okay, so 44.8% ownership. Which means all of this is 100%. So we need to do this net income and then times ownership. Like this. And this is weird. Enterprise value of 2. Okay, let's continue. This is 100%, and they only own 44%. 20 plus years. 20 plus years. 10. Okay, I can add some, let's say until 2005, 2045. '77 here. Okay, 77 and 77. Okay. 49%, they say. Why is it 45 here and 49? Oui, 40 years of my life. Huh, 40 years. I'm not going to add 40 years here. That's too much administration. So just imagine the upside. So it's like this. Capital costs, yeah, they are already commissioned, right? So there's not a lot of capex coming in, I hope. Stage 2, 20,000. Okay. Uh, Incentives over 200 million. Oh, 35%. Okay, 35% tax rate. Maybe the tax rate can drop to 25%. What was the depreciation? Depreciation was 500,000. No, that's impossible. They don't list any depreciation here. Okay, this is more reasonable. Let's say 8 million, let's say 10 million. 10 million depreciation when ramped up. And here it could go higher. Depreciation, I don't know how much, 50 million. Okay. So that was it. And let's see, do we have everything? Okay, interest is actually negative 25. Okay, so now let's look at the net income. First, the balance sheet, was that 100% or equity is 800 million, non-controlling interest 60. So yes, this is the actual equity to the shareholders. So that's weird. We have an enterprise value at 0. So there's only upside, as you can see here. The earnings are going to be about 10 million. 10 million net income based on this calculation. That's not a lot, 10 million. Yeah, 10 million. Even if production goes up, it's still around 10 million. And when the interest payments are gone, then it's 10 million. So wait, let's add another row, price to free cash flow. So what kind of PE ratio is this? Market cap divided by net income. That's a PE ratio of, wait, this is market cap. PE ratio of 30. That's overvalued. That's the reason why this stock has gone down. They are not making any money. Let's say it goes back to 8,000. Then it's PE 20. So they're not making a lot of money. Right? If lithium just stays hovers here, then they're not going to make a lot of money. However, if lithium goes back to here, let's say double, how much money will they make? So first of all, the upside is 80 million upside. 80 million upside on a market cap of 480. That's maybe 20% upside. I see 20% upside in this company. So that means it goes from here to here. It's not a lot. It's basically nothing. And that's because the net income is so low. What about when lithium doubles? So it could go to 15,000. What happens then? If lithium doubles and the costs stay the same, then you get this 1 billion, right? 1 billion. And 1 billion upside means that we go from 500 to 1.5 billion. So that's a 3x. 3x is possible from here to here. So it can get back to all-time highs if lithium goes from here to here, doubling. So that's a speculation. I don't know if lithium will go back to here or it will stay like this forever, because there's plenty of lithium coming from South Africa. That's something that you need to forecast yourself. I think there is potential for a small rebound, but not back to this level. So I could say 7,500, maybe 7,000, maybe 8,000, 8,500, 9,000, and that's it. I don't think it's going to go to 15,000. So a little bit higher, with 60,000 production per annum. Upside is 250 million. So maybe it can go up 50%. From 400 to 600, that's 50% upside. Because it's such a high mine life, right? But the PE ratios are not going to be spectacular at these lithium prices. Okay, so yes, there is upside. That's the good news. The bad news is not that much upside. Probably hovering somewhere here, 3 to 4, depending on the lithium price. It's basically a lithium player. Do you think lithium is going to go up or not? Then it can go back here if it doubles. If it doesn't do anything, then it will hover somewhere here. But there is upside. Okay. However, there's also downside. If this lithium price actually drops, and I'm wrong, and it actually drops more, what is the downside then? Let's say we go to 7,000. It can drop, right? Not plausible, but it can. And then you can see there's no upside. Then we are just fair value. How much can it drop? 6,500. If it goes to 6,500, yeah, then it's over. Then you have losses and then you have downside. Okay. Yeah. So it's a low margin business currently, and it all depends on where lithium goes. Low margin, it can expand, margins can expand, or you can become loss making. Very difficult to tell. So that's why I'm not going to buy this, because I don't know where lithium is going to go to, and there's not a lot of safety margin here if it drops. Okay. There might be some things here that are wrong, but this gives me a pretty good first view on this company. It tells me that margins are not that great. Net income is not that great. Has plenty of mine life, but that will depend on how much money they can make, because the margins aren't that good. But there is upside if lithium goes up. And that's all it is. From here on, you can see this is lithium price. We are currently here, 8,000, 7,000. Yep, not a lot of margin if it drops. and it cannot drop below 7,000, or then that's a problem. But there's plenty of upside if it rises to here, of course. Then there's upside. Okay? It's basically a leveraged play on lithium price. That's it. And I'll see you next video. Bye.